All right, so next we're really going to cover risk management here. And when it comes to risk management, it's all about maintaining the longevity as a trader. This way, it's about that sustainability practice, right? We also want to build momentum. And when we build momentum, we want to make sure we're aware of what we're getting started with, what type of exposure we are at a risk of. And that way that we can start to really design a strategy, a workaround on what works best for us. And the way that we do that is by managing the risk when it comes to starting to investing, starting to look at different stocks. What are some of those indicators that this may not be something that would help out our portfolio, and that we may need to make certain adjustments in different areas so that we can make sure that we can execute accordingly to diversify our portfolio. So what not to do, right? So do not go all in. So we want to make sure that we are more disciplined when we're managing the risk of our portfolio. So if you take a position, not necessarily just going fully all into it. So just taking note of that and knowing how to view it at a long-term view. So we want to make sure that when you maintain a long-term view with tight numbers, how to not get really suckered into a particular position, and how you can really work around it so that you don't necessarily risk all your funds, all your capital, and in a way that you'll be able to not recover as much as you would like to. And we don't want that to happen. So we just want to be mindful of how do we mitigate the risk? How do we manage our portfolio in a way as we're looking at different stocks according to how much we're looking to put up to trade and execute on. So that's one thing we want to make sure that we're aware of when we're starting to trade some stock options. All right, so next is we're just gonna go over the type of plays that you use. So we have this this A1 play. So the A1 play is using 20-30% of your net liquidity. And when it comes to that, there's could be a potential loss of 5 to 10%. And when you're using this A1 play, you want to just be mindful of just to play a strategy of how it can potentially really impact your overall portfolio. So when it comes to selecting a position and having it, how does that affect your access to the funds that you have available, the capital that you have, and how you can deploy it?
Yeah, I want to say with that A1, you definitely want to make sure that, you're going to learn about indicators later on, but you definitely want to make sure that all your indicators are aligning. You're looking at price action and things of that nature. You're going to find out what works best for you. You're going to have your A1 play, and, if you get in and it starts to go down, you definitely want to be disciplined enough to go ahead and get out. You don't want to take a loss bigger than 10%. Okay, so that's your A1 play. Your A1 play, you go put in 20 to 30% of your portfolio capital. Nothing more than that. Okay, we don't want to go all in one stock and put in our whole portfolio in. Be disciplined in that. Okay.
Yep. And next we have our B play, which is the 5 to 10% of your net capital liquidity that you have. So what you don't want to manage your loss, and how we can manage both of those expectations too, depending on the type of play that you want to use.
Yeah, with the B play, so this is just all your indicators may not be lining up, or the market could kind of be iffy, it's not as smooth, but it still look good. It still look like you can make a little money in it. So you're going to go in with 5 to 10% of your portfolio instead of 20 to 30%. It's just it's a little risky, so you go in and take a little caution. And with that play, if it start going against you, you're not going to take a big loss. You're going to end it at max at a 5% and go ahead and get out. Okay.
Nice. So before we jump into that, I just do want to take some time. We did cover a bit, in this amount of time. So do we have any questions here? Anyone need some clarity on anything that we covered thus far?
Okay, we have a hand. Anna Floyd and Jennings.
Okay, Anna, you could go ahead and unmute yourself.
Hello, good evening. So you guys have me hyped over here. I've been kind of following along in terms of wanting to trade options for a minute. So I think I'm going to dive in with your group. However, I have questions. So do I how do I get my questions answered if I'm in real time, practicing real time and I'm stuck or confused? Because sometimes my mind goes blank when I'm in the flow of it all. So how do we get in touch with you for those kinds of situations?
I'll drop my IG, or someone can drop my IG, and you can touch bases with me. I'll definitely help you.
Thank you, Anna. Jennings, you could go ahead and unmute yourself.
Yeah, we have. Let me also address that. We have a community of option traders. It's a whole bunch of us, thousands and thousands of us, in which we meet up every day trading. So if you're really serious about getting that experience, definitely touch bases with me.
Yes. My question is, this may come down the line, but will we see like mock trading or real time trading in some of these classes or in the syllabus or study hall? Thank you.
I'm sorry, I didn't hear what you said.
Will we see like real time trading or mock trading in the study hall or within the syllabus?
Not live. The market is closed, so by the time we actually start trading,
Okay.
the market is open from my time. I'm on Central, so it's from 8:30 to 3 o'clock Central time. So that's live, but you can definitely paper trade as well as TradingView. You can get on trade. We'll go through all these things, but definitely TradingView. You can actually back test and everything like that. You can practice even when the market is closed, doing paper trades and just put learn how to buy and sell and things of that nature. And even when the market is open, you can do that. But we will touch bases on that, or how to buy and sell and things of that nature in this course with you all.
Okay, Gina, you could go ahead and unmute yourself.
So you guys mentioned trading on catalyst companies. Can you share more about the definition of a catalyst, like how we can identify it?
A catalyst is like it's news. So there's a lot of different news sites that you can look at. You can look at Yahoo, you can look at NASDAQ. We're going to go over that too as well in the course of different sites that you all can actually go through. We're going to even go to some of the sites and so that you can know what you're looking for. Look at earning reports and things like that to see if they met the numbers in which they said they were going to make or not. When that happens, the market either goes up and down and kind of follow the news. So that's what it means by having a catalyst. It's just seeing what's the news that's going on with that particular stock and or the market in general. Even sometimes news that's coming from the White House and things of that nature also affects market.
Okay, so anything that makes it move.
Yep. Information that's going to make it move, regardless if it's good or bad, because guess what? We make money even when the market goes down, unlike someone just regular investing, you just buy like a 401k, right? People invest. If the market's going down, they're losing money. But with us, we make money regardless if it's up or down. So like I said, can you read the chart going up? Can you read it going down? It doesn't matter. We're going to get the bag. We're going to get the bag. That's for sure.